Hey guys, Toby Mathis here again, and today we're going to be talking about some tax considerations you may not be considering when you're thinking about where to retire. Now, we're going to dive in here to the tax in a second, but there are some things that people will always consider before they move on retirement. And it might be the cost of housing, it might be facilities, it might be medical treatment, it might be access to things that you care about, and family and things like that. But what we are going to be talking about today is count them, six things that we're going to look at from a tax standpoint to make sure that we're making a wise decision when we're deciding where to retire. So I'm going to pull up some slides and allow you to take a look at I get these from the Tax Foundation. You can go take a look at the backup data yourself as well. But these are the things, the six areas that we really should be looking at, and that a lot of times we're not. Now, this is one that you might be looking at, which is the state income tax. And you might be saying, hey, look, I know that there's states down here. Let's just grab a few. Like we can already see Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, and Wyoming don't have income taxes. So you say, like, that's it. These are the best states, obviously. There's other considerations that we have to look at. But look at these guys here, like New York, California. I mean, California is just crazy, 13%. So we want to make sure that we are looking at how we are going to be treated. So one consideration is the overall income tax. But what if you are retiring and the only income you are receiving is from IRAs, pensions, or 401ks, exempt plans? Then maybe, just maybe, we should be looking at that. And luckily, we can see exactly which states tax and which states do not tax those types of distributions. So you could be in a state that has a high tax rate, but does not tax your distributions out of your IRA, your 401k, or your pension. And you can see, like, there's only one state, Alabama, really, that's kind of sitting in here where pensions are not taxed, but the 401k and IRA distributions are. The rest of them, you're going to look at the red buckets. Like, just look at Pennsylvania there. Hey, all of a sudden we're zero. We still have Texas and Florida and Nevada and Washington. They are sticking out like a sore thumb because they don't tax anything. But then there should be other considerations. The most obvious is your property taxes. What if I am owning a property in that state? Then maybe I want to consider how much property tax, because these can get out of hand pretty darn quick. And the state, one of the worst culprits is right down here is Texas. And then I'm going to throw a couple people into them. Like there's obviously there's higher states up here, New Hampshire, Vermont, that's pretty high. Ohio's pretty high. Wisconsin, in other words, these states need money. So they need to generate that income somewhere. And so quite often they have these hidden property taxes. And then I'm just showing you the state. You could be getting into the county. And it's like if you're down in Miami, you could be looking at some pretty seriously high, sometimes as high as 3% property taxes. Ugh. So we want to make sure that we're considering that before we move. I've had clients that have actually moved, bought properties, then said, you've got to be kidding me, and sold within a year because the property taxes were so high. And they said, this is crazy. Of course, it depends on the value of the home. And so if you live in a state where it's high, it could get crazy. So where else is the state going to be driving its income? You guessed it. A lot of times they're looking at sales tax. And so what I did is I grabbed the states that don't really have much of a sales tax. In fact, they had zero state sales tax. You still had some local taxes in one, Alaska, but we had Delaware, Montana, New Hampshire, Oregon, Alaska that just don't have sales taxes. That might be a consideration for you, especially if you like shopping. Now, a lot of states that do have sales tax may have exclusions for things like food, right? So you want to make sure you're considering, hey, what is it overall going to look like? And luckily, there are organizations that do put things out on an annual basis. I grab them from the Tax Foundation. It's a nonprofit that I tend to rely on for this type of data. but they put out a or a state by state tax burden guide to let you know how your state comports. Now, remember, this is not something that you're just going to go and say, oh, I can see that like Alaska's number one, therefore I'm going to move there. With two, therefore I'm going to move there. What do we got? We got Tennessee, number three. Maybe I should just move there. We got South Dakota. We have North Dakota. We have Michigan floating in there at number five, right? So we have four, five. Let's see, where's our number six? Six is going to be Texas, right? So like we're looking at the states that generally speaking have the lowest tax burdens. But that's not the end all be all, because again, the type of income you're going to receive is quite often going to be treated differently state by state. And so it's something that you should just do some calculations on. And especially if you're planning on buying a home, it's something you should be considering those state and local taxes as to whether or not it's something that's going to have an impact on you. Because the last thing you want to do is get into a situation where you've moved for retirement and then you find that there is more week in the week than money in the week, and you're a little bit frustrated and you feel like you're not having the retirement that you want or deserve. And so we want to make sure that we're looking at look at New York out here. Jiminy Christmas, just beating the snot out of people. I'm always kind of shocked at some of these tax burdens when you look at it. But again, there's lots of other reasons people love New York. Maybe you don't have to have a car, right? So you got to do your calculations and figure out whether there's offsets to these things. So again, these types of charts are great as a starting point, but it's up to you to do the calculation. So now we've talked about retirement. Now let's talk about the inevitable. And that is when we pass away, the states still like to take a shot at us. And so we really should consider our state estate tax and possibly the inheritance tax. Now, there's nothing I can do about the inheritance tax. The inheritance tax is levied on the recipient of monies, depending on where they live, not where you live, where they live. And it's levied on inheritances. And there's just a few of them that are rolling around out there. Iowa, Kentucky, Maryland, Nebraska, New Jersey, Pennsylvania. They have inheritance taxes where they tax the recipient. So if you have children or if you have beneficiaries living in those areas, you might want to look at it. Now, quite often, if it's like a spouse or a direct descendant like a child, there may be little to no inheritance tax, but that's number one. Number two is your estate tax, and this can get crazy. Now, the federal estate tax has an exclusion that is massive right now. $13 million plus per spouse. But that doesn't mean that you're out of the woods just because there's not a federal estate tax, because there's a state estate tax. And it's like, ouch. Let's just say you lived in Oregon, for example. It's only $1 million, which means if you have assets over $1 million, they're getting taxed at 10 to 16%, depending on how much. So if you have even a modest residence and some other assets, you might be getting hit hard. How about Washington? I remember vividly a prominent family leaving Washington later in life and moving down to Arizona, not because of the weather, but because they did not want to pay Washington State's estate tax, which you have an exclusion of just 2.193 million. It says of 2023, and you're starting at 10 to 20%. Ouch. Now, that's nothing compared to the federal estate tax. When you get above that exclusion level on the federal estate tax, you're going to be hitting that 40% range very quickly. And I remember the days when I started practicing. I think we had a $600,000 estate tax exclusion, and then you just started getting hit. It was even more than 40%, if my recollection is correct, where they are hitting the estate. That's why this is devastating to people with family businesses, farms, things like that. So many folks have lost their estate. They've had to sell things off because there wasn't enough money to pay the estate tax and they ended up having to liquidate the estate. So you want to consider that depending on where you're moving. So if you have a large estate and you're thinking of moving to one of these states up here, oh, that could be pretty brutal. Or I should say the gold states here, because the inheritance tax is going to be dictated by where the recipient of your estate lives, whereas these other ones are where you live. And yes, it can have a dramatic impact, especially if you have substantial assets, on what ends up happening with your estate. Seen it happen. It's not pretty. It's almost always unexpected. And it's a liquidity issue. I have to pay 15, 16, 20% of an estate, but maybe it's a lot of real estate, maybe it's business interests. How are we going to get the cash? Where are we going to get it up from? Maybe there's insurance proceeds, but usually what ends up happening is you have to have an estate sale. And as we all know, that things don't go for 100% at estate sales. Most of the time, estate sales is where people go for bargains, not to pay full price. And that tax is assessed on the fair market value, not on what you receive. So quite often, it's a very unfair result. So those are the things, 6 state tax considerations you should be considering before you retire. If you think somebody could benefit from this information, please share it, and please like and subscribe.